Hey guys, and welcome to the Working Money Channel. So can you believe it? Elon Musk is now facing a lawsuit over insider trading of Dogecoin. This one coming from Ian Binns on Twitter. Elon Musk faces a lawsuit over Dogecoin price manipulation, and guys, this is what it's coming to. Billionaire businessman Elon Musk is no stranger to the constant media spotlight as he finds himself in the public eye, one way or another. But in a recent turn of events, the billionaire businessman finds himself entangled in a lawsuit that accuses him of insider trading and market manipulation of Dogecoin. Now, we know Elon has been, he's famously tweeted out about Dogecoin, and that has, historically gotten the price really moving. Let me just bring up Dogecoin real quickly here. We have seen historical moves for Dogecoin, and even at the top of the market. What was it? I think it was the Saturday Night Live performance where he said something on Saturday Night Live about Dogecoin, and it did continue to spike up. I mean, we were seeing an overall market rally, but the FOMO is certainly something I think we can all agree that Elon has contributed to. Well, now he's getting sued. The lawsuit alleges that Musk exploited various platforms, including Twitter and his appearance, on Saturday Night Live to manipulate the price of Dogecoin and profit at the expense of investors. The lawsuit filed in Manhattan federal court on Wednesday night claims that Musk utilized a combination of tactics, including Twitter posts, paid online influencers, and other publicity stunts to trade profitably through multiple Dogecoin wallets controlled by him or his electric vehicle company, Tesla. So a lot of allegations here. And I mean, again, at this point, it's just that, allegations. One alleged piece of evidence highlighted in the lawsuit was Musk's sales of approximately $124 million worth of Dogecoin in April. The sale coincided with his decision to replace Twitter's Bluebird logo with Dogecoin's Shiba Inu dog logo. And I don't know if you guys remember that when he did that. It was this logo up here in the top left-hand corner of Twitter. He did replace that at a point with the Dogecoin logo. So they're saying these are all tactics for price manipulation, but it is a slippery slope because Elon Musk is a rich man and he can kind of do what he wants. He can tweet out something and that's just that. It's just a tweet. So, I mean, if people decide to FOMO in, that's, up to people to decide to do. And I mean, he's not really doing anything secretly. He's doing everything publicly, but it's the masses. This is what government really hates. And, I think especially organizations like the SEC, because they just cannot control wacky billionaires and the decisions that they make. The lawsuit further characterizes Musk's alleged activity as a deliberate course of carnival barking, market manipulation, and insider trading. Investors contend that these actions not only defrauded them, but also served as a means for Musk to promote himself and his companies. So it's going to be interesting to see how this rolls out and what happens. It's going to be very, very difficult to suggest that this is market manipulation. I mean, changing a logo on a platform or making a tweet about a certain cryptocurrency. Yes, Elon Musk has a lot of followers, but I mean, if I were to do that, if I had the power to change the Twitter logo or if I made a tweet about Dogecoin, I don't think people would suggest the same. But I don't know. I guess, anything could surprise us at this point. I think this just speaks, though, to the broader market and, how government officials are getting really scared now. They really don't want us in crypto. It's apparent on mainstream media, like I was saying in yesterday's video, which if you guys didn't catch, I will link it up here in the top right-hand corner. I was talking a little bit about, just briefly, mainstream TV shows and how they're framing cryptocurrencies as negative and how, they're suggesting it's only extremists. And again, I'm using this word lightly. They called us a lot worse than that. But it's only these types of people who are into cryptocurrency. And I mean, it's just kind of an offhanded remark. But at the same time, it's them trying to permeate the masses. You don't want to be associated with the extreme. So don't get into this crap kind of investment, I guess is kind of, in not so many words, what they are suggesting. Nevertheless, we have Elon tweeting about coins like Doge, and now he's going to court over it. Interesting. We're also noticing this, though. Coinbase Derivatives Exchange is going to offer institutional Bitcoin and Ethereum futures. So, on the one hand, they're telling us, don't get into crypto. It's for extreme people. But Coinbase, they're looking to make some more coin by offering Bitcoin and Ether traded futures for institutional clients starting on June the 5th. So guys, This is only a couple days away, starting on Monday, and it is again for institutional clients. So I gotta stress that, right? They're really setting up the rails for institutions to come in, and so this market cap here is going to look like chump change once the institutions come in. A $10 trillion market cap, I don't think eventually is off the table. We already did get up to $3 trillion in the last bull run, and that was just based on a spec market. So when institutions come in, we are going to see some serious crap, I guess, as Doc Brown would say. Coinbase said it created these products to cater to increased institutional demand following the issuance of its Nano Bitcoin and Nano Ethereum contracts last year. The BTI and ETI futures contracts sized at 1 Bitcoin and 10 ETH per contract, respectively, will be settled in US dollars monthly and let institutional traders hedge market bets, expressing long-term market views, or utilize the product in complex trading strategies. So this is where it's going, guys. It's going to get regulated. Institutions are going to be jumping into this. You think institutions are listening to mainstream media? Popular TV series saying crypto is only for extreme? I don't think so. Do as they do, not as they say. Who said that famously? I forget now. Put it down in the comments if you guys remember. Brian Monarch here on Twitter posting this. So guys, he's hoping maybe we'll see a settlement by Monday, if not the Hinman docs on Tuesday. Well, that only brings us to June the 5th. And Fred Rispoli down here saying, no, remember the parties have until June the 13th, not June the 5th, to file their unredacted briefs pursuant to the court's order. If a surprise settlement is coming, I don't think it's before June 13th. So we still have some time to go. My bad, says Brian Monarch. I had the dates wrong. I saw something on Google saying that it was an earlier date, but that it was the initial one before the extended one, I guess. All right, same hope, but within a week later. Thank you for the update. So that's the other thing, right? June 13th, we're still waiting for those documents to be revealed, just over a week away. I can't wait for that. Mr. Hubert here also posting this. Holy crap, have you seen the latest job posting at ConsenSys? Now get this is an interesting observation considering how confident Joe Lubin has been with regards to, with regards to their relationship with the SEC, but experience in managing civil litigation, including in the customer intellectual property, contract administrative law, and agency enforcement contexts. Experiencing managing regulatory investigations. What? Could this mean that maybe ConsenSys might be investigated next? I don't know. I mean, there's no other inclination that they could be. Historically, we've thought, the ETHgate scandal, we've made all these connections suggesting that, Ethereum was in bed with, higher ranking members of government to safeguard a monopoly with the big banking institutions in the United States. Well, maybe the jig is up. XRP awaiting judgment here saying they are preparing for being up next. And maybe that's true. Find myself wondering if ConsenSys was served a Wells notice at the same time as Coinbase. This coming from M. Cryptodamus here on Twitter. But being a private company, they chose not to publicize it. So, I wonder what is happening here. Maybe it's just that they're, I don't know, maybe just trying to be prudent, maybe trying to be proactive in, hiring somebody to be on their team just in case something happens, and nothing has happened yet. However, guys, this house of cards is crumbling and crumbling fast. The SEC has been called out on their lack of clarity several times across the industry and from within Congress, and it's only Congress who can really make the rules. So, as famously put by Stuart Alderati, in-house counsel at Ripple. So the landscape, it looks as though it's, somewhat clearing itself out. Maybe that's not the right term for it, but we are seeing big moves in the space, and, because more regulatory clarity is happening in other parts of the world, we are seeing big companies like Binance react accordingly. And so thus the landscape is in fact changing. XRP Crypto Wolf bringing this to our attention. So this coming from ProCoin News here, recent moves by Binance spell potential trouble for the entire industry. And this is basically outlining how Binance, the most popular cryptocurrency exchange worldwide, is now complying with recent crypto regulations based on the new MiCA framework, from the European Union. Binance will be delisting several coins and crypto assets. And so according to a press release, they decided to delist 12 tokens. And guys, these are not just random small little tokens. They had to delist them in Italy, Poland, France, and Spain. The coins are mainly privacy and anonymity tokens. And the list includes Decred-ZEC, Horizon, PIVX, Navcoin, Secret, Verge, Firo, Beam, XMR, which is Monero, and Mobile Coin. So privacy coins that have historically been, under scrutiny, I think, from the beginning. These are truly private coins that, most mainstream traders don't really know about unless they see them maybe on CoinMarketCap. And so, again, the landscape's changing. If a big company like Binance, a big exchange like Binance, is delisting these cryptocurrencies, that certainly means something. That means that, the framework is in. I mean, there's thousands of other coins that they can trade, so I guess it's no sweat off their back. Nevertheless, it is spelling a more transparent crypto market. A double-edged sword for us crypto traders because, on the one hand, we want to be able to trade whatever we want. Here, let's bring up XMR real quickly here. This is Monero, one of my favorite privacy coins. And these coins have just been decimated, though. I mean, you can just even see here from this high back in May of 2021, we have seen now a decline of cryptocurrencies like Monero, and I'm just using this as an example, just one of the privacy coins that has gained quite a bit of popularity over time, down about 71% here. At its low, it was down about 81%. But really, guys, the sad thing here is from this low, it has only gained about 49%, and I don't know how much higher this is going to go. This is a real death shot for these particular cryptocurrencies. And if you guys are wondering, well, what's going to be safe in this coming bull run, I do have a Patreon where I'm going to be trading my picks, and I guess I'll let you guys in on a tip. None of the coins that I've chosen are privacy coins, so no need to worry about that. It is only $5 a month, so I'm going to be sharing my trading journey with you guys in this next bull run. I'm going to be posting trades on the days that they occur, and I'm going to be giving you guys market updates every so often. So, letting you know when I'm going to be down cost averaging, if I'm going to be down cost averaging, and it moves away from the typical cryptocurrencies that I talk about on this channel, XRP, Algorand, HBAR. I have other picks here and I'm using metrics that I don't talk about on this channel. So for $5 a month, I think it's pretty good value. Just if you guys are wondering, if you guys are interested in that kind of thing. Again, when we're getting news about these kinds of coins now, becoming delisted from the biggest cryptocurrency exchange on planet Earth, it's going to be difficult to navigate this new financial system. So diversifying into different kinds of cryptocurrencies in this coming bull run, I think, is a pretty good strategy. So again, guys, only $5 a month. I think that's pretty good value, but I'm going to continue on here. Mr. Mann bringing this up. Brooks Entwistle made a comment on RippleNet and their strategy operating in this new emerging financial system when asked the question. Guys, here's how he responded.
Thanks. Actually, Brooks, I wanted to bring you to maybe react to this and see if you agree that in order to rebuild trust in the system, that there are certain, consumer protections that need to be put in place. And when, Jorn talked about sort of the three priorities in terms of identity, the assets, and the consumer protection, would you rank them similarly? Would you prioritize sort of the focus on trust rebuilding in a different way?
Absolutely. I think it's a great framework and setup. I think everything we've done by building this cross-border financial services payment network has been and had to been built on trust in these elements. One of our first use cases on RippleNet, the network, was the remittance business. Mm-hmm. And for a Saudi oil worker to send their entire paycheck across our network to be paid out in the Philippines and then delivered to a village counts on our partners on both sides of that network with our technology in the middle. And we have a fiduciary responsibility to make sure that anyone on RippleNet or any market we're operating in is absolutely up to the highest standards, which means we absolutely have firm lines in the sand about any markets that are under sanctions or anything along those lines. And so I think you've got to do that, and you've got to stay with it, and you've got to stay with it through all these ups and downs that we're going through as an industry, and just be super consistent with that as your North Star. And so I wouldn't disagree with that framework at all, and it's really how we've had to build it. And the minute you have a bad actor on your network or a market that you haven't fully vetted, and something goes wrong, you can watch your volumes decrease immediately because the whole trust breaks down in that. And I would like to echo, Jorn said something I think that's really important about this. We're all kind of dealing with the blowback for the last 6 months or 8.
Okay, and then the clip ends there. Brooks Entwistle here saying we have a fiduciary responsibility to our customers to operate at the highest standards. And you guys heard him in that clip. If there are bad actors on the system, well, then liquidity breaks down and Ripple cannot have that. I mean, liquidity is core to their remittance businesses. I mean, liquidity is just important for so many reasons, but to remittances, I mean, you can't have bad actors on the system. The trust would break down and that could make the whole thing unravel. So they vet everybody. I mean, they've been doing a great job so far. So I wanted to thank Mr. Mann here for posting that. Another one too from Mr. Mann, the CEO of Crunchfish, did mention Ripple and Stellar working alongside central banks. And they're now aware of Crunchfish, who offers offline payment solutions. So Crunchfish, for those of you guys who do not know, is partnered up with the BIS as well. Here's Joachim Samuelson, the CEO of Crunchfish. Listen to what he had to say here.
what we are seeing is simply solutions on hardware. That's it, really. And that's why I think we had this play on that, what the competition does in hardware, Crunchfish can do in software. And it is significant. And I think it was really recognized at this conference that we are very unique in that position in the market. And here is a segment in the market looking at the central banks. And with this conference, I think we have established ourselves as a brand. I don't think many, except the ones that we have approached directly, were really aware of us. And this goes with central banks, but it particularly also goes with the companies that most closely work with the central banks. That would be e-currency, for instance, that we've partnered with. They were there. I met with Mitch Cohen again, who was working with the Bank of Jamaica. But there were many others as well, like Ripple, Stellar, Progressoft, and all are now very aware of who we are. And that would be a good bridge to us, because they are the one that work closely with the central banks, because if central banks going to mint digital currency, they will need some sort of platform in the back end. But these platforms need us in order to have a solution. So I think we established ourselves nicely in the area of central bank digital currency. Next one, we're heading for Cape Town. The conference is Central Bank Payment Conference. It's in late June in Cape Town, and we will be there again.
So boom, Ripple and Stellar working alongside central banks. Not that we didn't know that before, but just kind of a confirmation from Joachim Samuelson, the CEO of Crunchfish, who is partnered up with the BIS. So I guess XRP and XLM moving in tandem makes a lot of sense from a technical analysis perspective because of how they're poised, two separate entities, but essentially in terms of remittances, cross-border payments, companies that are very, very similar, taking on the same markets. And we know the history with Jed McCaleb. I probably don't have to go over that again. But the thing that I really love about Ripple, I feel like they're continuously innovating. XRP Crypto Wolf posting this. Now, David Schwartz did unveil the XRP Ledger's new innovative automated market maker network, basically just giving a breakdown on what it is. He did give a pretty detailed explanation here that I don't think I'm going to go over the full thing. He does say, though, for those who want to understand AMM's trading strategy and may find the math too complex to follow, here's a glossy, oversimplified way to understand how the trading strategy works. And then proceeds by posting 7 paragraphs in a description of, an easy, glossy way to making this work. So I'm just going to give you guys the highlights here. I'm going to give you guys the summary. So we've talked a little bit about automated market making in the past and how that's garnered attention for its unique liquidity provisions and profit sharing strategy features. David Schwartz did take to Twitter to elaborate on the intricacies of the system, explaining that the trading strategy employed is a volatility harvesting strategy. So based on XRP volatility, guys, this is where automated market makers can make money. It capitalizes on price fluctuations by buying when prices decline and selling when prices rise, effectively arbitraging price differences over time. Now, for those of you guys who don't know what arbitrage means, I just feel like I should probably bring this up because this is the whole concept surrounding AMMs. Arbitrage is the simultaneous purchase and sale of the same or similar assets in different markets. So if you can buy something at a lower price on one exchange and sell it at a higher price on another exchange, that is where you find the profit margin and the arbitrage. And so this is how, sometimes people make money this way, trading. A good example is when Bitcoin was trading for the kimchi premium on the Korean exchange. People were buying it on other exchanges, selling it in Korea, and they were making a profit, a tidy profit, just for basically buying and selling at the same time. So it's saying here, similar assets in different markets in order to profit from a tiny difference in the asset's listed price. It exploits short-lived variations in the price of identical or similar financial instruments in different markets or in different forms. So this is where essentially AMMs make money. He also clarified that the auction mechanism of the AMM sells arbitrage slots for liquidity provider tokens, resulting in the destruction of these tokens. This destruction increases the fraction of the pool's assets represented by existing LP tokens. Additionally, the pool executes a trading strategy and charges a spread when providing liquidity, resulting in larger pools and increased exchange value for each token. So basically banking on the volatility. Schwartz further shared his findings from simulations conducted on the trading strategy, indicating its success in volatile stocks. However, he noted that its performance diminishes when faced with consistent trends. So once there is stability in any kind of asset, whether that's XRP or anything else, this is where you're not really going to need automated market makers because there's no volatility, there's no arbitrage, right? Previously, the developer highlighted the uniqueness of XRPL's AMM, positioning it as the potential leapfrogger of other decentralized exchanges. One of its most distinctive features, in his view, is that it allows liquidity providers to claim a substantial share of profits that would typically be allocated to arbitrage. So guys, as an automated market maker, you can make some money leveraging your XRP, for example, and the longer description is here. Now, Jack here on Twitter saying, here's a glossy, oversimplified way to understand AMMs, and then posts a massive wall of text. So David Schwartz, truncated it even more. He says, okay, here's an even simpler one. Number one, AMMs charge fees when they trade. Number two, volatility causes people to trade with AMMs. And number three, thus AMMs turn volatility into fees. So basically, that is the long and the short of it. HM Dog down here saying the AMM function seems plausible as the price of XRP has been in a state of consolidation for quite some time. But what about when XRP isn't consolidating? Regardless of the SEC case, that fundamental news will create either a positive or negative impact on price. He goes on to say, in an extreme manner, breaking the current state of consolidation, moving the market in a markup or markdown scenario. An AMM would have been perfect for the market environment in the past 2 years, talking about XRP, but potential parabolic price action would cause a lot of holders to sell off XRP for the yield. Thus, price runs much higher in a bullish price action scenario. Would our funds be locked in a grid trading strategy or would the AMM strategy be flexible with the price of the token? And David Schwartz says the strategy is immutable, which means it's not going to change, but you can remove the funds at any time. The worst case behavior is the square root of movement. So if XRP doubles, your worst case return should be plus 41%. So the square root of 2 minus 1. So basically stating once XRP is stable, this tactic will just not be as lucrative, but he does say you can remove your XRP at any time. So my guess, my wondering here is this a way to tame XRP price so that it is no longer volatile? Let's not forget, guys, David Schwartz has allegedly said, and I think this was, he told this to Nick Barafato, Mr. B XRP on Twitter, who's also a representative at Link2. He said to him, the price has to be high and stable because that's really the only way that, we can make this market work. So the AMM feature, is it a way to get XRP price high and stable? Or at least when it is high, is it a way to maintain that stability? Because you have these automated market makers here making profit off the volatility, but the more that occurs, the less volatile it'll be. Just another thought here. I'm not entirely sure how this system works, but the thing I do remember is David Schwartz saying, XRP will essentially have to command a high price, boom, in the blink of an eye. And if you guys want to see the video I did on that, I did it about a year ago now. I'll link it up here in the top right-hand corner. But it does really get me wondering, automated market makers, perhaps a tactic to keep that price relatively stable, something that Ripple, I think, has realized that they will be needing in the future. A high stable price for XRP is going to be good for their partners, going to be good for the network. And I mean, ultimately, if it's high enough, it's going to be good for us as well. We won't have to worry. We can sell some of our XRP at $589 today, and then tomorrow we can do the same thing. Essentially not having to worry about those large fluctuations. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.